What is up, guys, and welcome to another edition of Market Riders. Beating the market, one trade at a time. For you, the Market Riders investment channel helps you find the best deals in the market. So, without further ado, I'm going to be going over my top dividend stocks. So, these are some of my favorite dividend stocks and categories that I think everybody should look at for investing. Now, if you're not familiar with what dividends are, it's basically a form to build passive income. So, dividends is essentially where a company pays you for owning a share of a stock. So, you buy the share of the stock, and then the company pays you a certain amount of money that I'm going to go over later on in the video, and then you just collect money for holding the stock. So, let's jump into it with the first one. So, the first one on here that we have is ticker sign J&J, and that is for Johnson and Johnson. Their moving average 10 is 148.39, moving average 50 is 148.30, and the moving average 100 is 149.70. So Johnson and Johnson, pretty good company, pretty good brand. And then let's jump into the second one that I'm going to talk about in this first category. And that is Coca-Cola, ticker sign KO. Their moving average 10 is 50.20. Moving average 50 is 50.08. The moving average 100 is 50.33. So they ended the week at 50.10. So that's where they currently are at the time of this video. Also bear in mind that whenever you watch this video, the prices of these stocks may change. So just bear that in mind. So we may say, why do I pick these stocks? Why start off with these two? Because they are what you would consider dividend aristocrats. So Dividend Aristocrats is a company in the S&P 500 that has paid and increased its base dividend every year for the last 25 consecutive years. So that means for at least 25 years, this company has increased the amount that they've paid for holding their share, holding a share of their company. So if we look on here, this is a very good tool. It allows you to see, how long the company's been paying. So if we look at the top, just three right here, we have 3M, Coca-Cola, Colgate. For the last 57 years, they've continued to grow their dividend. So that means if you were 50 years old and you got one share of Coca-Cola when you were born, then it would have continued to grow and be giving you more and more money every year. And this is, how powerful compound interest really is. So with compound interest, you basically accumulate more and more money. A lot of people use that money to reinvest into buying more stocks. That's what I do. I have on my channel a dividend course. It's in the playlist. You can look at it. It's free. But if you want to start your dividend journey on growing a small passive income and essentially collecting money every week, look at the course in my video down on my channel. And then, it's free. You don't have to pay anything for it. But it's just a small couple videos explaining how to set up and track dividends. So those two are on my list because, they pay a dividend and they increase their dividend. And they're very adamant about increasing their dividend. In 57 years, if you think about how long of a time that is for an increase, that's longer than, the 2008 stock crash. And they've even constantly increased even through, the current pandemic that we've gone on. So very solid companies, and what I would call recession-proof companies. So I start off with these because, I stand behind what the company makes. Johnson & Johnson is definitely in the vaccine niche, but they do also make a lot of things like masks and healthcare items that everyone uses. And Coca-Cola, everyone drinks Coca-Cola. People didn't stop buying Coca-Cola just because of the pandemic. People still went to the store and bought it. So I think that they're two essentially recession-proof companies. So going into the dividends, this is how much they pay. So if we look on here, we can see that increase that they're talking about. So in 2019, or let's start in 2018. In 2018, they were paying 80 cents, the beginning portion. Then they moved it to 84 cents. They started 2019 at 84 cents, then went up to 90 cents. And then they went from, in 2020, started off with 90 cents and have got up to 95 cents. And then they started off with 95 cents and started to go up to $1.01. So they've just steadily increased as time has gone on, which is good for you. And this is how much you'll get paid per share. So, each time you own a share, you get paid this amount. So for every share you own, you'll get this amount. Some brokerages like M1 Finance allow you to get partial shares. So if you have a partial share, they'll divvy up the amount based on how much you own on this record date. So going into the next one, which is Coca-Cola, you can see how much they pay. Their quarterly dividend as well, just like Johnson & Johnson. So quarterly just means that they pay, 4 times a year. So we could see their quarterly dividend right here is 40 cents, went up from 39 to 40, then to 41 in 2020. So they had a steady increase as time has gone on as well. Now you may say, oh, it's just going up 1 penny every year. 1 penny is actually quite a bit because, a lot of people don't own just one share of this company. Some people own, tons of shares of this company. So you making 1 penny, you own, 100 stocks or 100 shares of this company makes quite a bit of difference as far as capital appreciation goes. And that's just for holding the stock. So the next category I want to go over are the dogs of the Dow. So these are the dogs of the Dow. The dogs of the Dow investment strategy that attempts to beat the Dow Jones Industrial Average each year by optimizing towards high yield investments. The general concept is to allocate money to the 10 highest dividend yield blue chip stocks among the 30 components of the DJIA. The strategy requires rebalancing at the beginning of each year. So this was made popular by a book that came out by Michael B. Higgins called Beating the Dow. So I like this strategy. I think it's outside of the box, but some of the companies that I have in here are definitely large, solid players. So I like this strategy, and that's why I picked some stocks from this list. So on this list, we can see Coca-Cola is also on this list. So they kind of fit 2 categories. One being a dog of the Dow, as well as being a Dividend Aristocrat. But the 2 that I picked from this list, one being Pfizer and the other one being Verizon. So if we go to Webull, we can see that Verizon is kind of down on a bearish downtrend at the current moment, at the time of this video. But I still think they're a good company overall. Their moving average 10 is 58.19, moving average 50 is 58.48, and the moving average 100 is 58.92. At the time of this video, they ended at 58.01. So going into Pfizer, let's look at Pfizer. At the time of this video, Pfizer's moving average 10 is 37.67, moving average 50 is 36.99, and moving average 100 is 36.88. So they ended the day at 38.24. So not too bad of a metric as far as that's concerned. So you may say, why did I pick these 2 for dividend companies? One being Verizon is the largest 5G network in the United States. And, if 5G is starting to roll out, recently Apple has released their iPhone 12, which has 5G capabilities. It's not the only phone with 5G capabilities, but, with them owning majority of the share of the market as far as cell phone manufacturing is considered, and, having the largest number of sales for cell phones and all their products like that, it was a pretty huge announcement, especially since they're using Verizon as their main distributor of their phone. So, Verizon will definitely be able to benefit from that. Also having the network that provides that connectivity to that device. So going with their dividend, we can see in 2019, they paid 60 cents for half of it, and then 61 cents for the other half. So this is also a quarterly dividend, which basically means you get paid 4 times a year. And then in 2020, we can see that they went to 61 and then went up to 62. So based on the analysis from here, it was 60 and 60 and then went to 61. So the 61, you could assume that the next one that comes out will be 62. So going into the next one on here, we got ticker sign PFE for Pfizer. So the reason I chose Pfizer is because they're like one of the top, I guess, contenders for the whole vaccine race. So the top companies will be Pfizer, who are partnering with BioNTech, and Moderna. So Moderna and Pfizer, basically, the top two who are going, to be giving updates pretty soon on their progress and their trials for this vaccine candidate. And as you know, that's going to make the stock price itself go up. So any development from the vaccine world, is always good. But just besides that, they give a dividend as well. So this is kind of one of those rare stocks that has growth appreciation as a stock, but also growth appreciation from dividends as well. So there's kind of, it's kind of hard to find a stock that has a category of those two together. Usually it's just, when people buy dividend stocks, they don't really look for, capital appreciation as far as the stock price itself. But this one actually has capital appreciation because the niche that they're in. So we can see their dividend history right here. They start off with 32, then goes 34, 36, 38. And so it's continued to pay, every quarter an increasing amount. And, I think that it's a solid company overall. So going into my last group of stocks, we have real estate investment trust, or REITs for short. So if you hear anybody talk about REITs, that's basically what these are. A real estate investment trust, or REIT, is a company that owns, operates, or finances income producing properties. REITs generate a steady income stream for investors, but offer little in the way of capital appreciation, which is what I was talking about with Pfizer. Most REITs are publicly traded like stocks, which make them highly liquid. REITs invest in most real estate property types, including apartments, buildings, cell towers, data centers, hotels, medical facilities, offices, retail centers, and warehouses. So it's not just houses. It's all of these categories that you see right here, and some more. I think they may have left a couple out on here. So let's go into the two that I've chosen. So one is ticker sign O, and this is for Realty Income. Their moving average 10 is 60.57. Moving average 50 is $61 even. The moving average 100 is 62.11. So it looks like they are at a lull right here. They are bearish, denoted by the moving average 10 being below the moving average 50 and the moving average 100, which is yellow and purple line. But they ended the week at $60.53. So not bad as far as that's concerned price wise. And then we have Stag, which is for Stag Industrial. If we look at them at the time of this video, we can see that their moving average 10 is $32.82. Moving average 50 is $32.80. Moving average 100 is $32.79. So this is from the perspective of Webull. You may be asking what platform this is. This is Webull. If you'd like to sign up for Webull and get two free stocks when you deposit $100 or more, I have a link down below in the description. And then you can go and get these charts as well. You don't need to sign up for Webull in order to use their charts. Just type in Webull.com and you can pull up charts just like this and follow along. So going into those two stocks and why I chose them, Realty Income has a whole bunch of Dollar Generals, Walgreens, and things of that nature under their umbrella for being their tenants. And if you're familiar with companies like that, they are essentially deemed essential companies when it came to shutdowns and when the pandemic started. So they did not close. They had customers continue to come in. So they were still able to pay their rents. So when you have companies like that, they're able to pay their rents. This company in general continues to make money. So the reason that I like these or this sort of company in this, or I guess this sort of niche of REITs is because their dividend is paid monthly. So the other ones are paid quarterly, which is 4 times a year. But if you look on here, REITs are actually paid every single month. So every single month, you will get this amount of money into your portfolio whenever you start it, which is always nice. So if you look on here every month, we can start from the beginning of 2020. So the beginning of 2020, they paid on the first January 15th. They paid 22 cents. So this is February 14th. They paid 23 cents. March 13th, they paid 23 cents. April 15th, they paid 23 cents. May 15th, they paid 23 cents, so forth and so on. One important factor that I want you all to consider is that March, April, and May was when we were dealing with the pandemic. So that was when majority of stores started to shut down, places started to close, and people had a lot of uncertainty on what was going on. This company was still paying you dividends. So if you were to collect a portfolio just owning this company in general, you would have still gotten paid, even though, people were losing jobs and, the economy was very uncertain. So that's very powerful to think about as far as investing is concerned, that if you were to just hold and park your money into companies like this, then you would have still been getting money when people were out panicking, wondering, what was going to go on. So investing is very powerful, especially in ways of building passive income, and basically an insurance policy to keep your money and to grow your money. So I always encourage people to go out there and continue to invest in because it is very lucrative and beneficial. It's also fun at the same time. So going into the last one, we have Stag, which is Stag Industrial. They have a bunch of warehouses that they lease out to a large amount of companies. They also pay monthly. They pay 12 cents per month at their current rate at the time of this video. They may increase it, they may not, but it looks like they've been increasing it, every year. So in 2019, they paid 11 cents, then they went up to 12 cents, which is good because you get continuous growth of your dividend for just holding the stock. So monthly, we can see they pay 12 cents, and it's a good solid company. They have a lot of warehouses. They have a lot of people who they lease to. So I think the company will continue to grow, and you get those nice monthly dividends, which is what you want into your account. So that's a little diverse, small portfolio. You all can take these and put them into, any portfolio you like, and just track them, grow them. Just also bear in mind this is for educational purposes. So this is not, financial advice on telling you what to do. This is just pointing you in the direction of what I think are pretty good companies, and showing you how much money you can make by owning these companies. So good luck to everybody out there trading. Hope everybody's able to lock in profits, and I'll see you guys next time. Peace.